First off, the president seems to think that this grouping, this group getting together is, kind of conspiring against America, obviously, based on his post. What do you think this means that these countries who are largely making up the BRICS are getting together right now and being pretty clear they're not really worried about the Trump administration and Beijing and the tensions there?
Well, hey, all you're missing in that photo ops is Iran. But of course, I think what this represents is really increasingly the global South really emboldened to unite together in reaction to President Trump's tariff, and of course in reaction to what historically has been the U.S. hegemony.
So are there real investor implications here? I think that's the real question a lot of people are trying to figure out. Specifically, I want to point out to the Indian Prime Minister, Narendra Modi, posting, it's really good to see Vladimir Putin going out of his way just to kind of, it feels like thumb his nose to the United States. India is obviously a very important trading partner. China is a very important trading partner. When you're seeing these countries getting together and, again, seeming to kind of thumb their nose at the U.S., does that mean something for trade policy in your mind? Does it mean something for some of the companies who are multinationals that depend on business in India and in China?
Yeah, absolutely. I think, for the first time, since really the U.S. has dominated the world, we're seeing countries starting to say no to the U.S., right? I think at the start of the trade war, it was impossible to imagine that these trade partners would say no to the U.S. administration. Historically, what the U.S. asks, the U.S. gets. But as China sort of stood pat and said, no, we're not going to negotiate. No, we're not going to cave. You're starting to see other countries. So it's India. It is, Brazil. It's Canada. So I think it's been a bit of a mishandling on the part of the U.S. in sort of miscalculating just the kind of strength and sway that we continue to have geopolitically, especially with China creating that second polar. I think this is really the beginning of a shift from a one-polar, unipolar U.S. hegemony to a two-polar, bipolar world anchored by really the G2, the U.S. and China.
So, Jason, what does that mean for investors? We often show the ETFs that correlate to Indian equities and Chinese equities. Does that change the investability of any of these countries? We were actually showing specifically the Nifty 50 a few days ago, and after the 50% tariffs were put in place, it pulled back quite a bit. The fact that these tensions seem to be here to stay, does that change the investability of any of these overseas markets?
Well, it absolutely does. I think for a very long time, investors in the U.S. have done phenomenally well investing just in the U.S., right? Diversification was something that's viewed as really unnecessary. But I think increasingly, if the world does move toward multipolar, if you're seeing major trade partners, major economies like India, willing to actually strike a new relationship with China, willing to trade using renminbi. I mean, the diversification of, hey, what if the world is no longer purely U.S.-centric? What if it's no longer just the dollar? It could be the BRICS currency rising. I think diversification means a lot differently now.
Is there one country or one group of companies that are less investable specifically today after this?
Well, I would say the global companies are more investable today, not less, right? The tension in the U.S. may be scary, but it is also diversification, right? Because this tension means other paths, other partnerships, other trade blocks are going to emerge, things that hasn't happened before.